NIO stock just did something it hasn't managed in weeks. It broke above the $7 mark. On Tuesday, the stock closed at $7.02 per share, up 53 cents or about 8% on the day. That's a big move, not just in terms of percentage gain, but in what it means for momentum, sentiment, and the technical setup. After weeks of turbulence following the $1 billion equity raise announcement, investors seem to be shifting from fear to function. The stock's ability to defend $6 as a support level has now transformed into a breakout above a key resistance level at $7. The big question tonight is why this is happening, what drove today's rally, and whether this is the beginning of a new phase for NIO or just another short-lived bounce. Let's set the stage. Just last week, NIO shocked investors with news that it was raising around $1 billion through a share offering. That meant 181.8 million new shares priced at $5.57 per American depositary share, with underwriters given the option to take another 27 million. That's a lot of dilution, and the market reacted with fear. Shares plunged nearly 9% in a single session, falling into the mid-$5 range. Panic set in. Was NIO desperate for cash? Was management sending a signal that they were running out of runway? Those were the questions swirling. But since then, the stock has been fighting back. Thursday brought a 6% rebound. Friday added another 2.5%. Monday delivered a 4.4% gain to $6.49. And now, Tuesday's rally of 8% has taken the stock back above $7. This isn't just a recovery, it looks like momentum is building. And when you look at the context, there are several drivers working together to push the stock higher. The first is technical. Markets run on psychology, and round numbers matter. $6 became a floor over the past several sessions. Each time the stock dipped near that level, buyers stepped in. That repeated defense creates confidence. Traders and algorithms start to see 6 as the line in the sand, the point where risk is limited and reward is possible. Once that floor is established, the next question is where the ceiling sits. For NIO, resistance was in the $6.50 to $6.70 range, then at $7 flat. Breaking above that number is symbolically powerful. It tells the market that the sell-off has been digested, that buyers are in control, and that upside momentum might be taking shape. The second driver is short covering. NIO has nearly 195 million shares sold short, about 12% of its float. When the stock tanked after the raise announcement, short sellers were in the driver's seat. But as the stock began to rebound late last week, many of those shorts had to start covering. Covering means buying back borrowed shares, which adds fuel to the rally. That dynamic helped push NIO higher on Thursday and Friday, and it likely played a role in Monday's and today's rallies too. The higher the stock goes, the more pressure shorts feel to close positions, and that creates a feedback loop. It's not a full-blown short squeeze, but it is a tailwind that can accelerate gains. The third factor is fundamental. For all the noise around dilution, NIO's operational performance remains strong. August saw a record 31,305 deliveries, up 55% year-over-year. In the second quarter, deliveries were 72,000, up 26% from a year earlier. Those aren't just numbers on a page, they're evidence that customers are still choosing NIO vehicles in a highly competitive Chinese EV market. More deliveries mean more recurring customers for NIO's battery swap service, more brand exposure on the roads, and more confidence that the company can scale toward profitability. Financial results from the second quarter also showed progress. Revenue came in at $2.7 billion, losses narrowed to $567 million, and gross margins improved to 10%. NIO is not profitable yet, but the direction of travel is important. Losses are shrinking, margins are stabilizing, and the company has a plan to reach positive free cash flow by 2026. The billion-dollar equity raise extends its cash runway and gives management the ability to invest in research, new platforms, and infrastructure. Investors are starting to see that while dilution hurts in the short term, it may be necessary fuel for long-term growth. Another driver of today's move is anticipation of upcoming catalysts. NIO Day 2025 is scheduled for September 20th in Hangzhou. This annual event has become the company's showcase for new models, technology roadmaps, and infrastructure expansion. This year, attention is focused on the third-generation ES8, a flagship SUV that could redefine NIO's position in the premium EV market. Updates on the Onvo L90 family SUV and the Firefly compact EV brand are also expected. These models expand NIO's reach into new customer segments and help it compete more broadly against rivals like Tesla, BYD, XPeng, Li Auto, and Xiaomi. Investors often buy ahead of events like NIO Day, betting that big announcements will spark excitement and further momentum. The battery swap ecosystem is also part of the story. While most competitors are focused on fast charging, NIO has built out a unique network of stations where drivers can swap a depleted battery for a fully charged one in minutes. Many customers subscribe to battery-as-a-service plans, creating recurring revenue streams. Expanding this network is one of the uses of the new capital. If NIO can scale battery swapping effectively, it could strengthen its moat and lock in customers in a way that few competitors can match. That long-term vision is part of why some investors are choosing to step in now. It's also worth noting that there hasn't been any major negative news since the equity raise. Sometimes no news is good news. With no fresh headwinds, investors are left to focus on what's ahead rather than what's behind. Analysts are still cautious but see upside potential. Citi maintains a buy rating with an $8.10 target. Bank of America is at $7.10. Both of those numbers are above where the stock closed today, meaning there's still room to run in the eyes of the street. When a stock trades below analyst targets and then starts to gain momentum, investors often view it as an opportunity. So why did NIO close above 7 today? It's a mix of factors: technical breakout, short covering, fundamental strength, anticipation of catalysts, and the absence of fresh bad news. Together, those create an environment where buyers feel emboldened, shorts feel pressure, and momentum builds. But before we get carried away, let's talk about the risks that still hang over NIO. Dilution is real. Issuing nearly 200 million new shares at a discount reduces the value of existing holdings. Even if the raise funds growth, shareholders now own a smaller piece of the company. Price wars in China remain intense. Tesla, BYD, XPeng, Li Auto, and Xiaomi are all cutting prices aggressively to capture market share. That pressure has already driven NIO's average selling price down from $38,000 last year to about $31,000 today. Lower ASPs mean tighter margins, even as deliveries rise. And then there's the macroeconomic backdrop. China's economy is slowing, consumer demand is softening, and government EV subsidies are being phased out. All of these factors could weigh on NIO's performance in the months ahead. That's why it's important to maintain a cautiously optimistic tone. Yes, the breakout above 7 is encouraging. Yes, the fundamentals provide support. And yes, upcoming catalysts could drive further gains. But the challenges are still real, and volatility is almost guaranteed. For traders, the key levels to watch are $7 as the new support and $7.50 as the next resistance. For investors, the focus should be on deliveries, margins, and the strategic use of that $1 billion in fresh capital. In conclusion, NIO stock closed Tuesday at $7.02, up more than 8% on the day. This move represents more than just a one-day gain, it's a potential turning point. The market has digested the equity raise, shorts are covering, buyers are stepping in, and anticipation for NIO Day is building. The $6 floor has now given way to a breakout above 7, and the next few sessions will determine whether this momentum holds. For now, the story is one of resilience, recovery, and renewed optimism. Investors are no longer focused solely on the pain of dilution. They're looking at the function of the raise, the strength of deliveries, and the possibilities ahead. As always, this isn't financial advice. Do your own research, weigh the risks, and decide how NIO fits into your strategy. But after today's breakout, one thing is clear: NIO is back in the spotlight, and the road ahead could get very interesting.